Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks. So stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform and I'm on the scan tab. And I'm going to be scanning the S&P 500. If you want to see me scan a different stock list, feel free to leave that down below in the comments. This is after hours data, so some of it may look different when the market opens or when this video comes out. I've gone ahead and sorted all of the stocks in the S&P 500 based on implied volatility. So we have the highest implied volatilities at the top and then descending from there. It looks like the stock with the highest implied volatility right now is Super Microcomputer. And it looks like we have a lot of stocks that have earnings coming up or have happened already. We always look at Super Microcomputer, or we have pretty often, so I'm going to go ahead and skip that one and look at a couple others. Let's go ahead and look at NVIDIA. It looks like it has earnings coming up on August 28th, so almost a month out. Currently trading at about $109 with an implied volatility of about 73%. I'm going to jump over to the trade tab now and we can look at what kind of premiums it's currently paying out. I'm going to be looking at the 7 days out options, so that's options expiring the following Friday. And as always, I have this custom column on my platform called percentage premium that quickly calculates the percentage profit for selling a cash secured put at a specific strike price. It also gives you an estimate for the percentage profit for selling covered calls as well. If you're interested in adding this to your own platform, make sure to check out the link in the description where I have instructions on how you can add this to your own trading platform. Now let's go ahead and start with cash secured puts. It looks like you can make about 1% selling the $98 cash secured put. This means you would collect about $100 in premium. And the risk here is if you did get assigned, you would need $98, which is the strike price, times 100 because each option contract is equal to 100 shares. So in this case, you would need $9,800 in order to purchase 100 shares if you did end up getting assigned. I am assuming in this case that the risk here is if you got assigned, because then you would need to pay a certain amount of money to buy 100 shares. You may define risk differently, but for this scenario, that's how I'm defining risk. On the covered call side, you could currently buy 100 shares for $10,921, and then you could go ahead and sell the $110 call options and collect about $435 in premium, or about 4% in just 7 days. Again, some of these numbers may look different when the video comes out because this is after hours data. And the risk here for the covered call, the way I'm defining it, is the amount of money it takes for you to actually buy the 100 shares, because you never know how the stock might move after you buy the 100 shares. So in this case, that would be the $10,921. Let's go ahead and jump back to the scan tab and look at a couple more stocks. Let's go ahead and look at CrowdStrike. It's one that's been in the news quite a bit lately because of some of the issues they've been facing. Looks like they also have earnings coming up on August 28th, currently trading at about $224 and an implied volatility of about 64%. Let's go ahead and jump back to the trade tab and see what kind of premiums it's currently paying out. Again, looking at the 7 days out options, it looks like you could make about 1% with cash secured puts selling the $210 cash secured put. This means you would collect about $204 to maybe $210 for selling this option. And the risk here, again, similar to how we defined it on the previous stock, would be if you did end up getting assigned, you would need $21,000 in order to purchase 100 shares of the stock. On the covered call side, you can currently buy about 100 shares of the stock for $22,100, and then you could go ahead and sell the 222.5 call option and collect about $785 in premium, or about 3.6%. This is a more expensive stock, so it does require more money to perform cash secured puts as well as covered calls. Jumping back to the scan tab, let's go ahead and look at one more. Let's go ahead and look at Uber, a slightly cheaper price stock and one that we haven't looked at in a while. Looks like it has earnings coming up sooner on August 6th, currently trading at about $61 with an implied volatility of about 53%. We can go ahead and jump over to the trade tab and look at the kinds of premium it is currently paying out. Again, looking at the 7 days out options, it looks like you can make about 1% selling the $54 cash secured put, which means you would collect about $54 in premium for selling this. And the risk here is if you did end up getting assigned, you would need $5,400 in order to purchase 100 shares. On the covered call side, it looks like you can currently buy 100 shares for about $6,185, and then you could go ahead and sell the $62 call option and collect about $245 in premium, or about 4% in just 7 days. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of S&P 500 stocks sorted by highest implied volatility at the top and then descending from there. If you have any questions or comments, feel free to leave those down below and I'll make sure to answer them. And if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.